good evening, good morning. Doesn't matter, guys. I'm so excited to have you with me here today. If everything went well, you commented patience and was given access to this comprehensive video. My name is Fabian Callejas. I'm an entrepreneur, trader, and investor. And today we're gonna cover why patience is my biggest challenge in 2024. Okay? And it's not just an elementary observation. We're going to break down why technically and fundamentally this is a different market, okay? This is something that nobody's talking about as well. Then we're going to cover how Pop saved me from losing six-figure portfolios. What is Pop and how can we work towards implementing Pop, okay? So, without further ado, why should you listen to me? We're going to get straight into it. So, get your coffee, get your notes, and honestly, just sit back, relax, guys, because this can be really, really good. Okay, and I don't know how long it's going to take, so let's just jump right into it. Why should you listen to me? Okay, why should you listen to me? Here's a simple observation I should start with. In 2022, VIX was elevated. It was relatively high. And in 2024, VIX is more or less obsolete and its relevancy has never been more dead, to put it simply. Okay? Why? Let's ask ourselves why. Obviously, 2022 is not 2024, and I'm sure you guys read the news throughout 2022. I know you guys know what happened, but we can cover it for those who don't. In 2022, we experienced a higher interest rate environment. Now, we experienced the beginning of that, right? And throughout the whole year, they would hike up to 5 basis points or 5.5 basis points or 5.25. Not sure, exactly sure the number that it is now, but it hasn't been changed, right? 2022 was a major year in terms of hiking interest rates. And I think the important thing to remember about the original hike, or in other words, the first hike, is that hike has major tailwinds because investors, business owners, traders, everybody who is involved with public markets, even private markets, is going to be preparing for that. And so what I mean by that is they're going to start cutting costs, growth is going to slow down. There's just so many tailwinds in terms of liquidity being taken out of markets, right? That's literally what's happening. They want to shrink the money supply. That's literally what's happening. So they want to take all this money out. And so as a byproduct of that, we know if you've ever studied a penny stock, there's such few liquidity. There's so few liquidity that whenever a big buyer comes in, right, and that's relative, but whenever there's a buyer that comes in, those 5-minute candles start gapping in one direction or the other. The daily chart will gap, the 5-minute chart, the 15. There's a lack of liquidity, and for that reason, there's more fluctuation. Okay, and so think to yourself, the original thing that I told you is in 2022, VIX is elevated. In other words, volatility is higher. The only way that can be possible, and given the context of 2022 and in the environment, we know that there was a lack of liquidity, right? There was liquidity being taken out of the market. As a byproduct of that, there's more fluctuation, okay? And in 2024, something is also fundamentally true. Stocks are at all-time highs, right? You've seen the Nvidia, you've seen the new companies, the picks and shovels companies, come out and win in this AI race, whatever you want to call it. And for that reason, at least that's what is publicly accepted. That's the reason that stocks are at all-time highs, and some stocks are at all-time highs because they're focusing on this. This is their new growth avenue, and we're actually seeing it reflected on the picks and shovel company earnings. We're actually seeing the proof of concept in the earnings, and that's why you're having major expansions. But that's to say that whenever stocks are at all-time highs, what we can assume, and this is a very good assumption, is that new wealth has been created, right? That run, somebody had to make money on that, and somebody has new access to liquidity. And so when there's more liquidity around, stocks fluctuate less. Why? Because more people are simply investors, right? More people are in the float of the stock, and the more the less diluted it is, the less it moves around. Okay, hopefully that kind of makes sense in your brain. But in other words, in another way that we can just kind of observe this very simply is just look at VIX. And is volatility dead or is volatility relatively high? And volatility is dead. And so we know for a fact that there's more liquidity in the market at this time. So that's the context. That's what nobody's talking about. But this is something that nobody is really talking about. And that is, one thing is true, guys. When there's thin liquidity, in other words, where there's more fluctuation, there's more opportunity for traders, right? The bottom line is this: I'm a trader, and unfortunately, this thread isn't about how to hold your winners, but I hope you're starting to see where I'm going with this patience thing, right? Because if you win in this market, you are either holding onto your winners or you're staying extremely patient. Why? Because there's less fluctuation. That means there's less entries, and the only way you're winning is if you're staying patient for those entries that do appear, or you're holding on to your winners, right? And we're going to talk about the first part, staying patient, right? That's what this whole thing is. So again, guys, patience is obviously key in any market, but the underlying market dynamics and trends have reinforced it in this one. And the bottom line is this: there should feel like a lack of good trades. And I know you guys know what I'm talking about. If you ask experienced traders, they'll tell you the same, okay? So that's the underlying dynamic of why patience is going to be so important, and why this framework helps you build on that idea. So how pop saved me from losing multi six-figure portfolios. I've been using this framework for years. Okay, I've been using this framework for years. It's not really a new thing for me, but I've never formally presented it or written it down for me to refer back to it. And it's not only for me to refer back to it. I want you to refer back to it, because if this helps you, then there's more new profitable traders that I can share ideas with, and that's kind of the reason I'm giving this out, right? So here we are. In 2024, the market has been generally hard to navigate, not only because of the underlying dynamics of just this newfound compressed volatility, but again, indexes, they're, in other words, the S&P and the NASDAQ, what have you, technology stocks, industrial stocks, discretionary, when these stocks are at all-time highs, I often find that whenever they're breaking new highs, a lot of people are blowing portfolios, chasing price whenever one of those highs is sold, right? You're going to buy a high break, it'll work the first time, and the second time it won't work, right? That's kind of the idea here, right? So that's how I've noticed other people are losing, and myself, I've started to losing in terms of trading the indexes too much as well. So I'm just noticing everybody losing. Okay, I'm noticing too many people are losing, right? In what is perceived as such a great market, because stocks are rallying. So why are we not performing, right? There's actually something that we should study, right? So that's to say, when I noticed this, I finally could connect. Again, whenever you take a loss, and we're going to get into this, it's about being organized and reflecting, getting feedback. So whenever I was taking losses to start the year, I was seeing that, and then I was also seeing the underlying dynamics, and I finally put two and two together. And that's another reason why it saved me so much money and why I want to give this framework out now, right? It's the urgency is pressing, okay? So here we are, okay? The process below in pop, right? The pop process below gives me tangible steps I can take to see results in my trading, and hopefully it can for you too, okay? You will win using this is if you set your standards reasonably high and turn them into irrefutable ones, right? So you're not a product of your biggest dreams. You're a product of the standards you accept, right? That's key here, right, guys? So let's up our standards and let's follow this process below, okay? Let's get into it. Right. POP is an acronym for Plan, Organize, and Persistence. It is my framework for placing trades in 2024. And it was created from keeping you from popping your portfolio. Okay, that's where it comes from, right? I just thought I would let's say that. So anyways, this framework aims to help you practice patience, right? The underlying problem is you're gonna hold your winners, but that's not what this is about, or you're practicing patience. And in any framework I've ever built in terms of trading, it's come from building your plan. Okay. And so what is a plan going to do? What is a plan going to do? A plan is going to eliminate impulsion. Remember, the goal is to practice patience. Patience in the trading slash investing world, or trading or investing world, is simply the lag between your creative output of ideas and when you execute on a stock. So your goal should be to stretch this time as much as possible. Stretch this time as much as possible, because make no mistake, time is on your side, right? As traders, this is our biggest asset, and nobody's forcing you to do anything in this business. A simple truth that will save you millions of dollars at the end of your trading and investing career. As a trader, you need to look impulsion in the eyes and fight it, right? So what I'm getting with this is that latency, that lag in between your output of ideas and your execution is good, because that gives you that time. When you get that idea and you execute on it, gives you time for due diligence, right? In this writing down your plan, creating a method of execution that factors in size, portfolio allocation, and everything in between, right? Your vehicle, you could go down the list of everything you need to write down, right? And so that's why for me, time is just so important in the trading world. When you have to say, look, I'm gonna open up this gap. I want the output of the idea when I'm scanning my watch list, and when I buy the stock to be as long as possible, so I can really think things over and build a trade proposition, right? That's what we're gonna be doing, right? That's what we're gonna be doing. So that's why you need that, okay? And so planning is gonna be so important, and you're seeing why, okay? So, how do we organize this, okay? Because there's going to be something that's particularly difficult, right? This is going to be way easier said than done because of one single thing, right? Observation. Observation is a perfect digression into what it means to be organized, okay? You're going to write down your plan, consult it with other traders, and been challenged on your convictions, okay? And chosen a vehicle, whatever, everything in between, okay? And so there's going to be a very high chance that you're going to spend time where you have everything laid out on the table. You've written it down. Again, you've done everything. You've already planned everything. And you're going to say to yourself, well, when do I actually execute on the stock, right? When do I actually execute on a stock? And you're going to have to sit there. Maybe, right? Maybe that's what you're doing right now, where you just sit there and it becomes some of the most grueling work as a trader, where impulsion, there's that word again, can get the best of us, okay? That's when impulsion can get the best of us, when we're just sitting there like a lemon and you're going to lose. You're going to lose, especially if you're unprofitable, you're not disciplined. You're not disciplined in real life. You're not disciplined in trading. You're cooked. You're going to cook yourself. And it's going to be very, very difficult for you. You're going to find it's going to be difficult for yourself, okay? And so this is the good news. Observation can be organized, okay? And I wanted to give you guys an example because up to this point, I'm not laying down everything. And the reason is because I don't want to give such general advice where it's one size fits all and my process works for you. So you take care of the planning. You consult with traders the way you see fit. You prepare your method. I want you guys to do that. But I want you guys to plan however it may look for you, okay? But I thought I would give you my watch list process to kind of show how, once I have laid out all that, how I can get ahead of this period where I'm observing and where I know I can make a mistake, right? So, because at the end of the day, that's what impulsion is, right? If you just put on a trade for no reason, the market got the best of you. Okay, so I designed a watches process that begins with a cross section of 250 stocks and ETFs I scan weekly. So that's the master list. Okay, that makes sense, right? This is that exact output of ideas I'm talking about, where there'll just be a list of stocks where there'll just be like this list of stocks that I look at, and for the first time I say, you know what? I think there's actually an opportunity of that in this name. And so then those names are going to be aggregated into a new watch list called the focus list. Okay. Well, okay, that makes sense, right? These are going to be quality opportunities. This is going to be a round of due diligence, deeper due diligence on those names. And then this is the real sauce, that another 10 will be aggregated into another watch list with opportunities closing in on the execution window. This is the now list, okay? The now watch list is built by itself. How is that possible? My window of execution, the way I've characterized it, is built by an alert, okay, that I'm going to receive. I literally receive them on my phone, where a stock crosses a particular level where the risk reward starts to fit my criteria, and where I can place a trade on a proposition I created, right? On a thesis that I created. I have this elaborate plan. I've talked to people, everything in between, right? My roommate, go over there, have a chat with him. You'll say, yo, look, this is what I have. I've written it down, and now what I need to do is actually execute on it. That's not really up to me. It's if the stock can get to an area in which I like the risk reward, which I've predetermined when I created the plan. You see how this works? Okay, perfect, right? So filtering my watch list this way helps keep things organized, easy to track, and I can tell you exactly why and where I put on a trade. And this is all built to help, again, fight against the impulsion you may feel while observing, okay? So everything I've read up to this point should be configured in an organized manner and should continue to be organized in the following ideas. That's to say that your consultation with your friends, sit down, organize the time, have a coffee, your plan, have it written down, your vehicle, put it in an Excel sheet, track your trades. You guys get the idea by now. Hopefully I've slammed the table on this idea. Now, this might be my favorite part of the entire thread, because, and you see that it's very short and it's very brief, and it's persistence. The last P of POP. Why do I love it so much? Because this creates a loop of results where this is not just a list that you're going down and then you crumble it up and you throw it in the trash. This is something that creates a loop of results where you can measure your patience and you can go back to the drawing board and re-execute your ideas in a new way every single time and continue to get better. Because at the end of the day, guys, you know, the whole you're never gonna just go down read one article and that's all you're ever gonna use to, I guess, move on to the next level. You got to reread and then reread again. Okay, so take a breath of fresh air, because if done correctly, there should be no doubts about why you have the position that is moving in your portfolio, right? That makes sense, right? There should be no doubts. You know why you put on a trade, everything. Okay, confidence and excitement should be rolling through your body. You're a new trader, reborn. Win or lose, that's the beautiful thing. Win or lose, you did everything correctly. Up to this point, you've done everything correctly, so kudos to you, okay? But we're not out of the woods just yet, though, right? I've already said that this framework could be the most important part of, or this persistence could be the most important part of this framework, okay? Because feedback is how you will improve, whether you realize it or not. You will have to learn to accept it. Where you are going right now is your doing. You built yourself, and this will continue to be true. So who are you becoming now? Right? Who are you becoming now? You've built yourself. Who are you becoming now? So we're going to create beliefs or thoughts. In other words, we're going to create an idea. We're going to create an idea, a trade proposition. We think there's an opportunity. You're going to take massive action. You're going to consult, you're going to plan, you're going to organize. Okay? You're going to experience your outcome. You're going to win or lose. And then you're going to experience feedback. You're going to reflect about it. You're going to say, this is what I did well, this is what I did bad. And then you're going to form new beliefs and thoughts or ideas, and you're going to repeat the whole thing. And you're going to keep doing that again and again and again. And this is where the persistence comes to actually tell yourself, keep yourself accountable, and we're going to get into that, hey, I got to continue to do this. I have to continue to repeat this process or else I'm not going to make it, right? I believe in this process. I don't think it works for everybody, but if you're persistent and you follow what I've laid out here, I think you will win. Okay, so that's where the persistence pillar of this framework comes from, right? That's why this is so important, right? Because there's this feedback loop that it's gonna take persistence to stick with. Okay, so how to work towards implementing POP? Okay, this is very simple, right? How are we gonna implement POP? The good thing is that there's this thread here. If you got this video, you have this video here, and then you're gonna take some notes, you're gonna reread them, then you're gonna read them again, then one more time, and then once you've done that, you're gonna reread them once more. Okay. So as we have discussed, implementing POP will require massive action, but ultimately how you hold yourself accountable will decide your outcome, right? How you're persistent and how you keep yourself accountable will decide your outcome. Remember, you're building yourself right now, and everything you have built is your doing, okay? You're building yourself, you're watching this, and whatever you've done in the past, if you're not profitable, it didn't work. So keep building, right? Keep building yourself, right? Growth will stem from accountability. Did you read your notes, and did you do what you said you would, right? Again, are you following the plan? Are you following the method of organization, right? Everything in between, right? And so I've already mentioned it, but I don't have all the answers, and I don't want to give you general advice, but I believe in this process, and I also believe it won't work for everybody. So reconfigure and revise my model to cater to your personality, right? There's so many things that may seem a bit broad in terms of actual steps, like how does my planning look? And unfortunately, guys, I don't want to be mean, but I can't give you everything, right? I can't give you every single thing I'm doing to find the success that I am, but I can lay down at a high level the bigger picture process of what it takes. And so you keep yourself accountable, man. I don't know what you want me to tell you. You want me to give you a group as well? Like, look, I'm not trying to be mean, but you guys have to take some accountability. Go out, go learn, go be wrong, go lose, and then go win, right? So I believe in you. I believe in the process, and I hope you guys enjoyed this. Again, if you have any questions on anything, if you just want to have a chat as well, right? You could have questions, or you could just want to have a chat about finance, about share ideas exactly how I mentioned, then feel free to reach out. Do not be afraid to reach out, and hope you guys enjoyed this. I'll see you guys soon.